What up? This your boy Scholar Lamar, Cash Lamar. You are now tuned into the Wealth Analysis. I am showing you how to get paid from your phone, how to make money, what Forex is it legit, is it a scam? All your questions you have, they will be posted on here. Free content. You don't have to pay for anything. If you like it, subscribe, tune in. If not, get the fuck out my face. What up? What's good? Good morning. It is Monday, November 10th. About 6 o'clock in the morning. I was gonna go over some charts, show y'all some charts, but I have some information that's a little bit more important for y'all. Some of the trading essentials that I use when I trade, something I think you should use. Things like trade confirmations, patience, do's and don'ts, what a trading journal is, and of course over and over, buying and selling pressure. So those are some things I'm going to go over in this short video. It won't be a 25-minute video like the last one. It will be shorter, but this one may be 10 times way more important because it's 99% mindset. Everybody's telling you trade is 99% mindset. It's about you asking yourself, how long is it going to take you for you to get your mind right? First, let's go with essentials. Some essentials that you need every day. Something I use every day is called a trading journal. What a trading journal is, it literally helps you and is used for you to document every trade that you get into. Good, bad, ugly. It shows you every trade. And what that does is, once it shows you your trades, you seeing your habits a little bit better. For example, let me show you my trades. And I didn't realize what I was doing until I wrote the trading journal. And I was like, oh, I'm trading the wrong way. So let me show you. So, okay. All right, so we got simple, position type, entry date, entry price, exit date, exit price, lot size, pips, and profit. Now, what that will do is it will create that repetition. It will create you having those habits, doing what you need to do as far as trading, as far as progressing, as far as getting better each time. Let me show you my first trade journal. This is my favorite first trade journal. But look at this date. Look at the date. Right here. Entry date. All that shit is the same fucking day. Ain't no fucking way. You know? And I did some pretty good trades, but these ones I highlighted, I lost because I didn't lose because they were bad analysis. I lost because I was focusing on one pair and I was trying to trade and it's not buying. I got in for a buy. Oh, it's a small retest. Oh, I think it's going the other way. Oh, let me get in for a sell. Oh, it's a small retest. Let me get in for a buy. And just chasing money, chasing paths. That's not what you want to do. You want to be patient, take your time, and you want to get sniper entries, the best entries you can have. So that's what this will do. It'll help you. Also, it'll show you, okay, every time I take a gold trade, I lose. Let me stop fucking with gold for right now. Every time I trade US 30, I win. Let me go a little bit more in depth into this. It's showing that I traded Euro USD, Euro AUD, buys and sells. Most of my buys won, most of my sales lost. Was it bad interest or was the whole market going into a buy? And it gives you a chance to document all that, break it down, and come back. Look at the bottom. I put at the bottom, if you can see it, I put stop chasing pairs. Very important. Pay attention to possible loss amount. Practice patience. Don't focus on winning. Focus on losing. You will always have a chance to win if you take your time. Be patient. Compound. Grow over time. But like I always say, how many losses can you take until that last loss was your final loss that you can accept? Then it's like, I lose. So now I can't trade no more. It's not that you can't trade no more, it's just you're an asshole. You don't fucking listen and you don't pay attention to the big picture. And you're an asshole and you fucking stupid. So something you gotta figure out. I can't really help you with that. All I can say is get your trading journal, document it. Don't fill all this out. Because look, what I don't have, other ones. Again, that was that. And I had another one where I only took one trade that whole week. One trade. I like this chart a little bit better because it's a lot cleaner, it's a lot less shit, and I see what's going on, and I made money. Caught 23 pips on one trade. That's great. I know how to trade. It's the mental shit. It's the when to hold it, when to fold it, when to get the fuck out, when to accept it. And you'll never be right. The market is right. You're not right. The market is right. You can only react to what the market is telling you to do. So, confirmations to get into trades. We have weekly / daily key levels. We have market structure. We have trend lines. We have price action. Market channels. Alright. So these are a few confirmations we have. Let me crook it on the nigga. Alright, so we got weekly daily key levels, market structure, trend lines, price action, channels, market pattern, Fibonacci, break of structure, and retest. Those are a few confirmations you need to get into a trade. You don't know what those are. Many videos on YouTube. I actually have a few videos that I can put out there and show you exactly what some of those are and go more in depth over those. But those are just a few confirmations to get into trades, because like I said, I'm not teaching people how to trade. I'm just giving examples, helping people out. And for this, is really for a lot of people who are not beginner traders. They're more to the advanced side, or trying to get to the advanced side. I'm not really trading beginners or training beginner traders right now, because I'm still a beginner. I'm still learning. Once I reach a couple of my goals, then I'll start, having my classes again and do all that. But right now, I'm not doing that. Okay, so some more things you want to have are do's and don'ts. All right, so do's and don'ts. Stop giving money back to the markets. You make money. If you make $100 and you got $100 and you take the trade, don't feel like I'm gonna make $200, $300, $400. Take your $100, wait for another entry, make another $100, make another $30. But don't give your money back. Don't wait for a trade to go all the way up. You're like, oh, it's gonna keep going up. That bitch go down. You see it going down, and you let it keep going down until it take you out of the trade, and then it take you out even further. Don't let that happen. When you see the money you made, don't set a money goal. Set a pip goal, and that's very important, because if you caught 50 pips. If you got a 0.01, that's $5. If you got a 0.1, that's $50. If you got a 1.0, that's $500. So the pips is what matter, not the money, because you're gonna make the money regardless if you grow your account and learn how to count pips. Count your pips. Be able to count them off the top of your head. Like, I got I'm up $3. Oh, I know on a 0.01 that's 30 pips. Oh, that's 30 pips. I'm up. Let me take profit because that's 30 pips. You know what I'm saying? Don't be like, oh, that's only $3. What the fuck I'm gonna do with that? No, pay attention to the big picture. Pay attention to what's really going on. Okay, aim for TP, but Aim for TP3 but settle for TP1, meaning it's okay to have a goal for 150 pips. That's great, TP3. But if you got TP1 that's 60 pips or 40 pips, TP2 another 30 pips after that, don't feel like it's gonna go from one to the other, from TP, from entry to TP3. No, that bitch might go from entry to TP1 and drop all the way back down, and it put you in a trade. You hit your TP, but you can take TP because you thought TP3 was gonna hit. No, aim for TP3 but settle for TP1. Settle. And that goes back to not giving your money back to the markets. Pay close attention to the big picture. Yes, I always tell people I'm scanning on the daily and monthly and weekly. I'm scanning. I'm just looking for the direction of it. I'm trying to see what's really going on. On the 4-hour chart, that's when I'm looking for the moves. That's when I see what's happening right now or the next couple hours. On the 4-hour chart, that's what's telling me the moves. And on the 1 hour, the 30 minute, and the 15, that's when I'm looking for my entries, those sniper entries, getting in at the right point to where my drawdown won't be a lot. We're gonna a rule I have: at any time you double your account, get out of trade, close trade, look for me. Ask you something, because no matter what, if I double my account, it's like that bitch just don't hit TP. Like whenever I double my account, TP could be like right here. I double my account right here. Them bitches will not. You know what I'm saying? So my rule, anytime you double your account, meaning if you got $50, if you take that 50 to 100, I'm getting out the trade and look for another position. I'm not gonna go 50 to, oh, but my TP right here, I know I can. If I double my account, I'm getting the fuck out. That's how I do it. Don't give back more than 40% of what you made on a trade. Really, it's 40 to 60%. So if you up $100, you up $100, and you holding it. If that bitch go back down to $60, then it start to think about going ahead and taking your profit. If it get down to $40 to $50, you need to be considering. If don't let it get past $40, don't give them back 40% of what you made. That goes back to stop giving the money back to the markets. Learn how to take profit. Be comfortable. Be okay. Understand that you will not catch every move. It's no possible way to catch every move. It's moving all the time. So set up for what you get. Finesse the market. Get what you can and move the fuck around. Risk manage closely. Watch your risk management. People be like, risk management. Yeah, you gotta pay attention to it. It's very important, but at the same time, it's not important. It is, but it's not. It just depends on you, because like I say, if you got a really, really good trade and you want to go a point, 1 point up, $10 a pip, and the entry is so good, your stop loss is 6 pips away, then you may have lost $60 on a trade, or 0.1, you lost $6 on 6 pips. But if your fucking TP is 50 pips away, then I think that's a pretty good trade to over leverage, because it's showing me good signs that it's gonna hit the TP, and I got in at a great entry, and my stop loss is really, really tight. Then by all means, I can over leverage a little bit or leverage a little bit more, because the chances of it not hitting, yeah, it could not hit, but at the same time, I don't give a fuck, because I only lost 6 pips. I'm not tripping. I'll take a 6 pip loss. Over leverage or not, I can take that. And it just depends on the way your account set up, the way your mental is set up. Once in profit, set a stop loss at entry point. That's one of the most important things I learned. Set stop loss at entry point. Meaning, if you go up, you running, you up 15, 20, 30 pips, and it's going up, set your stop loss at entry. Meaning, if it does decide to go back down, you break even. You didn't win or lose. You know, if it doesn't go your way. But that's better than you went up 15 pips, then that bitch dropped 20 pips. Now you negative 5 pips on top of, hit your stop loss. Don't do that. If you going up and you up in the positive with the pips, put your stop loss at your entry level, so if it don't go your way, you break even. If you up 30, 40 pips, put your stop loss maybe 10 or 12 pips, so if it does go, you want some money. You can't go broke taking profit. If you taking profit, you can't go broke. If you got more wins than losses, you're not gonna lose as long as you're leveraging right and you paying attention to what's really going on. You can't go broke taking profits. Very, very important. Do not fall in love with pairs. Don't fuck with it. Oh, my favorite pair is gold. My favorite pair is GBP. No, for what? You don't own that. That's just like you going to the strip club and you seeing a fine ass stripper and oh, that's my bitch. Now every time I go to the strip club, another nigga better not pay up. For what? I mean, use it for what it is. You know, get what you can. Move around. Go to the next one. You know, if I go to the strip club, I'm scoping like the best 3 to 5 dancers in that bitch, and I'm gonna get a dance from y'all motherfuckers, you know, but you're not my girlfriend, so I don't give a fuck who you dance with before me or after me. Don't fall in love. Take emotions out. Detach emotions immediately. That's the best thing to do. That's the only thing you can do is detach your emotions. Cut losses early. Look for better positions. If you didn't get the best position, you know you didn't get the best position, and it started going the other way. Don't be scared to take a little small loss and get back in at a better entry. Yeah, you took a loss, but if you up here, if you got in right here, and it go up here, then it drop under here, then it drop under here. Get out the trade right here if you know this is a bad position, because that bitch probably gonna keep fucking dropping. Now you done really, really lost. But yeah, the better if you bring this one, you get down and that bitch shoot up, now you good. So cut losses early. Don't look for home run trades. You will never, I've been trading all this time trying to 100 pip trade. For what? If you got 3 30 pip trades, that's your 100 pip trade right there. So why you need 100 pip trade trying to risk it, getting money, giving it back, when you can just take 30 pips, wait for the retest, 30 pips, wait for the retest, 30 pips, wait for the retest, and you can just keep doing that over and over. Now consciously, you feeling better about yourself, and the whole time, if you go from, you got one trade, and you go from one trade, you add $30 to your account, add $30 to your account, add $30 to your account. That's gonna be a lot better than if you got that one trade and you up $50, you up $60, you up $70, but you don't take profit. So the amount of money in your account, your equity does not rise. So therefore you cannot leverage more money. Pay attention to all that shit. It's a whole bunch of confirmations and trade. That's a whole bunch of shit you gotta watch out for. That's a lot of stuff, but it's definitely possible because it's 99% mindset. How long is it gonna take you to get your motherfucking mind right? Identify winning trades and common traits. So you want to document every trade you get. So like I did. Like I just showed y'all. You want to document every trade. And right here, I'm highlighting the trades. I'm taking notes. I got other notes. I'm saying, okay, I lost because of this. I lost because of that. So pay attention to all of that stuff, and it will make you a much better trader. I promise you. This is the wealth analysis. Those are a few key tips you need to help you become a better trader. I hope it helps. If it doesn't, that's on your motherfucking head. Fuck you. A few more things I want to go over is that pressure. Go over that pressure. We got buyer's pressure. We got seller's pressure. I'm gonna go over this real quick, explain it to y'all. This is extremely important. You definitely need to know what this is. So, buyer's pressure is an area or zone in the market where buyers are looking to push price up. Seller's pressure is an area or zone where sellers are looking to push price down. Okay, so we got buyer's pressure is an area or a zone where buyers are looking to push price up. Seller's pressure is an area or zone where sellers are looking to push price down. You know, I'll let y'all screenshot that, pause it, write it down, take a picture, doesn't matter. An area or zone in the market where buyers are looking to push price up. An area or zone where sellers are looking to push price down. Extremely important. Let me show you what exactly happens with buyers and sellers pressure. So, say for instance, this is our trade. So we got boom, 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 boom. All right. So we're gonna say this right here. We're gonna say this right here. All right. So the way you want to trade is by paying attention to what's going on. So right here at the top is where we have our sellers pressure. And that mainly, it applies all over, but it mainly applies within consolidation, within confluence, within zones. That's when it applies. This is your seller's pressure, meaning everything above here, every time you reach here, it's dropping. It's dropping. Okay? Buyer's pressure is every time it's reaching up here, every time it's touching this, it's trying to go back up because that's how it is. And seller's pressure and buyer's pressure, it plays a role in where it's at, if it's inside of consolidation or outside of consolidation, like this, for example. Because yes, in consolidation, this line is giving us buyer's pressure, meaning that anytime it hits this, it wants to go up. But because it's below this line, it's closing below this line, that's when this becomes seller's pressure right here. That's when this becomes seller's pressure, because every time it's hitting this, it's dropping. Every time it's hitting this, it's dropping. Every time. Whether or not, just even if it's dropping, boom, dropping, boom, you know what I'm saying? It's still seller's pressure because it's below that line. So pay attention to all of that. If it's in the zone, then trade it. How you want to trade consolidations is if it's up here and you want to make some money, because it could be consolidating, but it could be a 200 pip consolidation. So if I'm doing that, then I'm taking it and like I'm selling right here, taking profit right here. I'm buying right here, taking profit up here. So if you want to trade that, just be careful and trade along the walls. Trade on the walls. Because if you're back against the wall, if you're right here, and you're back against the wall, it can only go so much further past the wall, you know what I'm saying, before you get out. But if you get in the trade right here, and the wall way motherfucking down here, you got a long way to go, and the bitch gonna hit here. So sell against the walls, sell on the walls, trade on the walls. That's buyers and sellers pressure. You have to notice when buyers are in the market, what zones are buyers in the market, what zones do sellers come in the market. Pay attention to that. That's really important for consolidation. And don't be afraid to pay attention to what's really going on. Pay attention to those zones, those lines. And like I said right here, yeah, this is a line with buyer's pressure. This is a whole line with buyer's pressure. But remember, if it's rejecting up here, then this bitch becomes seller's pressure. So don't say, oh, this buyer's pressure and it's rejecting, so what the, it's gonna buy. Pay attention. If it's showing you that bitch rejecting because it's closing out of the line, then motherfucker, sell or wait for something, a move to happen. Wait for a big move to happen. And then wait for the retest for that extra confirmation. But do not feel like things are going to go your way because they have to, because that will never happen. That's your wealth analysis. I hope it helped you out. If it didn't, I'm not sorry, because ain't nobody helping me out. So that's on you.